It's October 13th, and this is of course the video log that takes 30,000 to a million. After taking through the account, I'll show you all the positions, all the option plays. This is about 50 option plays now, and all my stock positions and etc. bonds. I'm going to talk about Cameco. My boys from Cameco. I haven't talked to about this company in quite some time, and I'm just going to give you a little bit of an overview. I'll look at the FinViz, some facts, some what the Robinhood Morningstar review says about them, and a few details that you might want to keep in mind when you're thinking about a company to buy. So here we go. Oh, I'm already on Cameco. Whoops. Excuse me just for one little second. Alright, so this is my account. I'm up about $4,000 today, mainly because of Apple. But, as you can see here on the right, let me see, double checking that you can see. These are all the option plays. You can see the ticker, the price of the strike price of the option, whether it's a put or a call, the expiration date, number of contracts, and whether it's a sell or buy. And from this you can deduct all information you want, you could want from my positions. So I'm just going to scroll quickly, and you can pause the video at any moment and take a closer look at the position if you want to figure them out. Now these are all the stocks. You can see how Apple contributed to $4,700 of gain today, which is about all of the gain that I had. Everything else kind of paired out neutral, and so just Apple was the big gainer. I did some calculation though to figure out, okay, has Apple really carried my account this much? And the answer actually is kind of no. If I took out all the gains from Apple, since the beginning of March, right? So since before the big virus drop, if I took all the gains I've had from Apple and eliminated from my account, I would still be at an all-time high if that was just sat in cash and none of this rise happened. So even though Apple is a sizable position of my account, maybe contributes to about 40% of the account, including the options there, it's still, I'd still be at an all-time high if they were just cash. So even though I'm very heavily on Apple and sometimes it's the only mover in the account, the option selling is like doing just as much work. So it's about even split, even though the rest of the positions are pretty inert, but the inert positions are kind of good for option selling. So anyway, that's the account. Let me keep going here. Let me see if I showed you. Okay, so these are all the stock positions here. Not much movement. Energy Transfer was up $100 or so, and I have some emerging market bonds here. Actually, quite a bigger position, 451 shares of PCY, and that would be contribute to about like over $10,000. I'm not sure. Actually, I should be selling some of that because I've actually dipped into margin. This is the account tab here, and you can see that I've got $4,000 of margin right now. So unless the emerging market bonds ETF, the yield, if it doesn't cover the 5% that I need from the margin, then it's not worth keeping it, right? It's worth covering that margin. What did I buy with this margin? Mainly oil stocks. Let me scroll back down to the bottom so I can show you here. Wait, am I showing it? Okay, good. Just gotta double check. So I have, actually bought HTGC, which is Hercules Capital as well. I did a video on that not too long ago. So I have Schlumberger and Royal Dutch Shell, which are very good picks. I might talk about Royal Dutch Shell later. I think I already did. Anyway, I'm forgetting. But today is Cameco Day, so I'm going to revisit it real quick, and we're going to talk about it starting now. So Cameco is a uranium mining company. It's the best of the best in my opinion, personally. It's the largest capitalization company out there. It's based off Canada, and they're the only $1 billion, plus they're like $3 billion market cap company, and they used to be bigger. And the only, I think, larger producer out there is Kazakhstan that produces uranium, but unfortunately, the prices are really low, and so a lot of the uranium supply, virtually all of it, has been kind of shut out, and Cameco has even gone in the open market to purchase uranium to fulfill its contracts. Now, because of that scheme, they have some revolving revenue there, and so they're able to pay out a dividend. But if you look at some of these statistics, first of all, let's look at the Morningstar, what it says about, let's go to Cameco here. The Morningstar report on Robinhood is actually kind of cool. It gives you a nice little overview. And so we'll go to it right now. And it says that, oh, by the way, it says, here's some information. Price to earnings ratio right now is 111, which is extremely high, but don't worry about that. I'll talk about it in a bit. 3.81 billion market capitalization, and dividend yield of 0.62%. And the Morningstar is got four stars. That means it's pretty much a buy. They're putting it at $15 fair value, and it's a little bit under 10 right now. Economic moat narrow, uncertainty high. That's definitely true. But stewardship, I would 100% disagree. The guys are anything but standard. I would put it at exemplary if I were them. This is kind of what their earnings look like. They're not making a lot, and the little they do make, they pay it out in the form of a dividend. So I'll go to the FinViz here, and you'll see what I'm talking about. So payout ratio is 97.9%. So virtually anything they make, they've used for the dividend, which is their $32 million of profit that they got here. And because of that, that's why the PE is a little bit high, because they're not making a lot of money right now. With the uranium price sitting at around $30 per pound, the uranium business is based on contracts, really. So they probably have contracted uranium probably in on the $50-$60 range, but spot uranium is about 30 right now. And I mean, it's really hard to talk about spot uranium, okay, because it's not like you can just go and buy some uranium from somewhere. Well, I mean, you can, but the commodity is very, very thinly traded because it's very special use type of mineral. And if you start buying large amounts of uranium, like, you're gonna get some government knocking on your door trying to find out what the hell you're doing with your uranium, right? Are you building nuclear bombs? Like, what's going on? Are you shipping it to, like, Iran or Pakistan or something, or some more volatile region? So they're going to want to know. So it's very heavily controlled and regulated mineral, and so you're going to have to jump through a lot of hoops to try to buy and or sell or mine or produce or use uranium of any kind, which is one of the hurdles that nuclear energy has had to deal with ever since its inception. It's had to deal with that stigma and regulation and oversight, whereas other forms of energy production don't necessarily have to deal with the same thing. But that's a little side note. Let's go back to the FinViz, and I'll show you a few other details about the company here. The employees right here are 1,800 employees, which is nothing. A $3 billion company, almost $4 billion with only 2,000 employees. It's great. So they're pretty thin and lean at the moment. All these margins look horrific because, of course, uranium is at a low price. Could it stay low for a very long time? Yes. But if I've learned one thing about, commodities, is that these kind of like thinly traded, obscure minerals tend to catch the last end tail of a commodity bull market. It's usually started with things like gold, and then, maybe copper and some like high-flying commodities, maybe nickel or something like that, or lumber, and then some other minerals follow, and then eventually the rare earth metals and uranium start to pop off. Silver somewhere in the middle as well. So if this is a commodity bull market since 2015, it was started by gold, and then now silver is finally joining in. And then if things go by plan, unless this commodity bull market is derailed by something or someone, then uranium should experience a rise in the next few years. I don't know when that will be. Nobody does, of course. But if it does happen, it might be worth having some Cameco. Other uranium producers that you may want to take note of are companies like Energy Fuels, UR Energy, Denison Mines or something like that. What was that? Nextera? No. Next. I don't know. Uranium Participation Corp. So you want to try to keep in mind some of the bigger names in uranium. All the smaller names have already shut their doors and gone off to do other productive things like start weed companies or what's the new trend nowadays? I don't know, whatever is hot. But tech, communications, Zoom, no idea. But anyway, so going back to Cameco, so 2,000 employees, ratios don't look too good, and there's actually kind of a high-ish short float, so people are not extremely bullish on Cameco at the moment, but that doesn't really worry me. Cameco's been staying about the same price for like 5 years, and it's one of my biggest earners when it comes to selling options against it, because it's just so predictable in price. It's just basically an option on uranium, so if uranium starts going up, Cameco definitely join the party significantly. If uranium goes up significantly, meaning like at least double the price, but until then it's probably going to stay in this range here. And let's show you this range, and you see the 5-year graph here. I'll show you in a second. This is the 1 day. This is the 5-year, and you can see from around here, from 2016, it's basically stayed even. So all these puts that are sold and calls that are sold, just collecting premium for like 4 or 5 years, and I expect that to continue actually in the next few years, maybe 1 year. Maybe there'll be some kind of a boom in a year or two, but I kind of doubt it. I think there's a lot of ins and outs in the uranium business. Like right now, the world is basically flooded with uranium and has been since 2011 when Japanese nuclear stations shut their doors and stopped using up uranium, and so now they had to sell their excess into the market, completely crash the price, or at least some of it. I don't know how much they sold or whatnot, but at least they stopped using it, right? And there are some reactors being built in Asia and India, but is that enough to make up for Japan? I don't know. All of a sudden Germany doesn't look too friendly on uranium and nuclear energy either, and US is not going to build any new plants anytime soon either. And so it's just basically India and and China, from what I understand. My knowledge might be a few months old. There could be some new developments in the uranium business. I haven't followed it that closely, but as it stands right now, it's a little bit of a standby situation. So Cameco is kind of like an option, I think a safe way to keep your money in case of a uranium resurgence. If Cameco does go down in price, might even half and stay there for a couple years, but eventually when or if the uranium price doubles, triples, or quadruples, which is not that hard to imagine, then Cameco will be there to profit from that situation. They have a lot of properties. They could start mining right away, and they can really secure some high price contracts. So that would be the way to go if you're into uranium. All right, well, of course, this is not financial advice. This is just for educational entertainment purposes only. I'm not a financial advisor. You should seek out a financial advisor if you're confused about anything, or even if you're not, and make sure you do it right. And so especially if you're dealing with large amounts of money and you can't afford to lose anything, because anything that you put into the market, you have a high percentage chance of losing altogether. All of it gone, zip. All right, so that's my thoughts on Cameco. I haven't visited this company in a long time, so hopefully you all enjoyed it. All right, that's it for now. Peace out.